Let's imagine something. You've just landed in Doha and don't know where to start.
Hi there, I'm your personal tour guide. May I know your name?
It's asking you my name.
Or maybe you're a resident who's never had time to explore the cultural gems around you.
Nice to meet you, Aya. What do you usually enjoy most when exploring art?
Doha is incredibly rich in art and history. But with so much to see, where do you begin?
Let's choose street art.
Okay.
Museum galleries.
Well, now it's easier than ever.
How much time do I have? I have 5 hours on my layover.
With AI-powered smart tours, your perfect itinerary is just a tap away.
You can now press Create My Tour button and start your adventure. Let's go.
Based on your interest, our AI art specialist curates a Qatar museum's experience tailored just for you, recommending the sites and art pieces you can't miss.
I wonder what it is. Let me take a picture.
This one is beautiful, really.
Now you can discover hidden gems.
The towering rose sculpture transforms a delicate flower into a bold urban statement.
Tawazun by Shu'a Ali invites you to explore the evolving landscape of Doha.
Experience must-see masterpieces and cultural wonders from Qatar museums.
This is Sheikh Abdullah bin Jassim Al Thani's old palace.
And all of that in a journey personalized just for you.
Please welcome back to the stage, Bloomberg's Jemana Bersechi.
Welcome back, everybody. I hope you had a good lunch. Just a reminder that you can engage with us on social media using the hashtag Qatar Economic Forum. And if you're interested in a complimentary 3-month subscription to Bloomberg News, you can scan the QR code on the screen to learn more. And now back to programming. We have a very busy afternoon coming up. We'll be talking about real estate trends and tourism. But first, we begin with a look at how CEOs are navigating the current market volatility.
Please welcome to the stage, Mathieu Chabron, co-founder of TKO Capital, Mark Coons, CEO of Ashmore Group, and Jenny Johnson, President and CEO of Franklin Templeton, for a conversation with Bloomberg's Eric Schatzker.
Hello again, everyone. Good afternoon. As you can see, this panel discussion is called CEOs in the Storm. I think for a trio of CEOs in the storm, this group looks pretty presentable. Just a little background on our panelists. Jenny Johnson runs a $1.5 trillion global asset manager. I'm sure many of you are very familiar with Franklin Templeton. Mark here runs a $46 billion firm specializing in emerging markets, and Mathieu runs a $56 billion alternative asset manager. So we have a tremendous range of investing expertise and asset diversity here on stage. I think that's a very good place from where to begin. My first question, panelists. We know America First has been destabilizing for the U.S. economy. We know it's been destabilizing for the global economy as well. How? You've been hearing about this. I've been hearing about it. You've been talking about it. Uncertainty, a slowdown, and in some cases a total halt in corporate investments, a loss of trust in the U.S. as a reliable partner, as a reliable supplier, a breakdown of the rules-based order, stresses on global systems such as supply chains. As I say, we've been hearing about that. We've been talking about it here at the Qatar Economic Forum and, of course, over the course of the past 4 months. However, and this is a really big however, as of this morning, U.S. stocks are within a few percentage points, like 3 percentage points, of a record high, and the MSCI World Index is within tens of basis points, less than a single percentage point of its all-time peak. So what I'd like to know from the three of you, starting with you, Jenny, is what exactly is the market pricing in?
Well, I mean, let's remember, we were just talking about at Davos, right? It was all U.S. exceptionalism, AI, technology advancement, you know, everything was positive. And then, of course, you had Liberation Day, which put the fear in so many people. But I think what people have realized is the Trump administration, and by the way, if you actually look at what he's been doing, he said he was going to do these things throughout the whole campaign, right? And so, you know, it's all about taxes, tariffs, deregulation, and government efficiency. So he's gone out and said, okay. And you have to remember, in the U.S., you have about 18 months to actually get anything done as a president, because chances are, and in particular this midterm, chances are he's going to lose control of the House in this, and so he won't be able to pass legislation. So he's gone out and he said, okay, I'm going to, and immigration was the other, and he came right out. And on the tariffs, if you're going to get people to the table, and from what I understand, he genuinely believes, post-World War II, that the U.S. has been unfairly treated with respect to tariffs. And so he goes out and he says, okay, I've got to get people to the table, so you come out hard. President Trump is a deal maker. We know that. And that, of course, scared the market, because the numbers and the statements were, obviously shocking. And then, as it's played out a bit, and you hear now Secretary Bazin saying, hey, this is interactive, right? Tariffs go with the tax policy, and they go with deregulation. And so I think now that people have seen a couple of deals, frameworks done, you're seeing the tax legislation move forward, they're getting more comfortable with the story. And so you're getting back to, okay, this is a storm, but we'll get through the storm.
Mark, Mathieu, what do you think? You're active in public markets.
Yeah.
Do these prices make sense to you?
My view, but I guess I'm talking my own book, is it's incredibly expensive and doesn't price anywhere near the degree of uncertainty that it should.
Mathieu?
I think it's a very complacent market. We cannot be that high on the public equity market, and I'm not a public equity person, but when the risk-free rate, or supposedly risk-free, is that high compared to where we were 2 years ago. So there's a disconnect. I think there is a lot of complacency. And I believe right now it's time to be very selective and prudent.
So, you were about to say something, Jenny?
I was going to say, complacency about what? Like, what are those risks that you think are?
I think there are.
Sorry, Eric.
No, this is perfect.
He said to make it conversation.
The less folks you hear of me as the moderator, the better off things are.
Happy to, in our view, is the fact that effectively the cost of doing business, defined as effectively what's the cost of liquidity, has jumped significantly, and I still believe that where we are today, and I don't want to just pick the 10 years as a reference, but in general, the cost of liquidity has increased, the quality, the availability of credit is highly, there is a huge dispersion, because the credit markets are not open for everyone, and we know that you need access to everyone to make an economy functional. And I think that here, that's where the public market, being sometimes maybe restrictive because it does not capture a whole economy, are being somehow complacent.
And maybe on the ability of the Treasury to always reprice an issue in significant scale.
US debt.
So I think maybe there's a bit of concern that everybody just assumes we can execute on all these savings via Doge, and we can put a tax bill through where we give tax breaks where we feel like, and it's all going to balance. The risk of execution around that while still funding what is a bigger and bigger deficit. I think maybe that's part of the complacency question, right?
And can I pick up on that too and just use it to challenge you a little bit, Jenny? I mean, what you were trying to do is explain, which is exactly what I asked you to do, why the market's where it is. But I want to know what you think. Do you have that much confidence? Do you feel that there's as much certainty as, again, an S&P 500 and an Morgan Stanley World Index at those levels suggests?
So, look, I think the next 90 days are really important. I mean, look, first of all, earnings this quarter are going to be very interesting, right? Because this is where some of the tariffs have actually, impacted businesses. They've slowed down their spending. I just read something today that 97% of the folks that import are small businesses in the U.S. Now, it's 1/3 of the dollar amount, but so if we don't get some clarity around this and it really does start to impact, I think we could have a big problem. So I also, but you asked the question on how did we get back, right? And so I think that was a story of back. Going forward, we are in a really sensitive and important time, which I think we'll see kind of how it comes through. If businesses don't start spending again, it becomes a self-fulfilling prophecy, and that is a concern. And then, I mean, the U.S. debt is obviously a concern.
We'll come back to that, I promise. For a couple of weeks in the aftermath of Liberation Day, you heard a lot of people saying that a big sell-off in U.S. stocks had been overdue, and that the world was over-allocated to U.S. assets and equities in particular, and that it was time to rebalance and put money to work in European and Asian and emerging markets, public or private for that matter. Mark, I'll start with you here. How much of that is actually happening? What do the flows that you're seeing show?
Only a little at the moment.
Only a little?
Only a little.
Let's just talk.
It is, but there are two types of flows. Well, I guess everyone's a retail investor in the end, but there's retail and institutional. And the institutional flows just take longer. So if and obviously Mathieu will have a view on this, but if I look at our European and Asian investors, they've already been saying since about 22, when they started seeing the Americans go exit stage left, they've already been saying, how much marginal dollar do we want? How many more marginal dollars do we want? So they're already beginning to look at other things to do. American capital, we're not seeing much of that yet. A little bit in retail, and in emerging market equities, a little bit of that's picking up. I think that's a little bit to do with people thinking, oh, hang on, there's this AI thing and it's all terribly fantastic. But America doesn't have a monopoly on that. And there's somewhere that is actually quite cheap that we maybe should start looking at, which is China, that is already clearly trying to develop places there and has put some effort into that and has already started to threaten some of the existing players in that space. So it's just beginning. Sorry, carry on.
Over the past 5 years, every dollar invested in the world, 80 cents were going to the US, across the board, public, private, equities, private, fixed income. And so obviously, back to basics, prices were going up because you had this marginal dollar coming in, rightly so. And we saw that, when the market started to freak out a bit, the public market was the first one to react, and partly, the very large cap, presumably the most liquid. And I agree with Mark, we have not yet seen on the private side, because it takes some time, right? I mean, you saw the announcement of some large asset owners that they wanted to sell off the private equity, for example. It takes some time. So the intention, it's not about, leaving the US. I think it's about, after, such flows, you end up with an allocation that is disproportionate towards the contribution of the real economy to the world, GDP or whatever measure you want to take. So I think that's what we're seeing, and marginally, be emerging market, Asia, Southeast Asia, you saw Japan also, yesterday, and Europe, we will see some increase,
I mean,
Jenny, you have a huge... Sorry, Mark, go ahead.
The US has 26 trillion of net liabilities. 10 years ago, that was 7. 26, so the 19 trillion has moved in terms of net liabilities in the last 10 years. That is a big amount of money that's come over from somewhere.
Jenny, I was about to say that you have many institutional clients and a vast pool of retail investors. What are those flows telling you?
Well, so a lot of people say, well, did people head to Europe? The European index was the best performing in the first quarter. When we were at Davos, people would talk about, they'd go around the world and they actually would just not mention Europe. I mean, that was like kind of the view, and it's the best performing index. But let's remember, there were things like Germany doing a stimulus program. There were, a lot of reactions that happened to sort of the U.S. position that actually made it appealing to switch investments versus saying, I'm losing faith in the U.S. That's number one. True. Second of all, the reality is we are still living in a time of amazing technological innovation, and with respect to AI, like we're barely have begun to see. The productivity gains that you've seen in the U.S. are from technologies that came, with the digital assets and, 20 years ago. And that innovation has so far been led by the U.S. And so, I actually prefer, I think it's better for the world to have, more success kind of globally. But you got to ask yourself, like, why isn't there a bunch of unicorn companies in Europe? What is it structured? It's not like there's not great, entrepreneurs with great ideas. Why is it that they're so focused on the
Shall
US?
we ask the European?
Yeah, I mean, the short answer to that is, you're probably talking about these giga caps, who have attracted so much capital to fund effectively, this innovation. I was focusing more maybe on the lower part of the economy, the mid-cap, those people.
I was being mostly facetious.
Okay.
No, what I do want to know, though, is you're right, Jenny, that Europe has not created the same number and the same size of technology giants, certainly, that the U.S. has. But important things are happening in Europe, aren't they? Right? Europe is starting to shift away from decades of dependency on the U.S. consumer, and it's being forced out of the U.S. security blanket, and it's moving toward a position of greater economic and especially defense self-reliance. I say it's an important shift. How important a shift do you think it is, and how are you telling your clients to think about this?
Well, it's actually critical. It's a survival, if I may say, need, and it's almost a reindustrialization of certain markets. Yeah. And here again, I mean, you need to fund that. You're not funding that with some passive public investments. I mean, you need the real money getting into this part of the economy, and defense is an obvious one. It's 3% of GDP. We're going to be increasing that. We're talking multi-billions. That cannot only be funded by public money, because there is no public money anymore. It's called debt, right? So someone has to come, to match that, and that's a great opportunity for private market investors, and that's a global, global statement. And in Europe specifically, I mean, we see the plan that the Germans, have been putting forward. Obviously, in France, under the leadership of President Macron, the many initiatives there, and there is some asks. Actually, I even had that from a US LP, a couple of months ago. It's an inbound call. We want to be more exposed to European defense growth because valuation start from a totally different level, so you can get the uplift.
Yeah, I mean, I think the interesting thing is that people believe the US always gets it right in terms of entrepreneurial and animal spirits. And there is a slight tendency to think Europe never does. The structural inefficiencies make it very difficult to do. So I think Europe has, yes, we can all buy that, we can all do the trade to buy the currency and think, there's going to be lots of growth with $1 trillion from Germany and 800 billion from the EU. But I think people will probably want to see it proven in Europe, and it may struggle a little bit in terms of seeing it proven for a while. Whereas the US has had the benefit of doing it so many times that people who are very comfortable, capital gets applied better there. It has its barriers, it's lots of these, but there's a lot of structural reform, there's a mentality, there's horrendous labor markets in Europe to deal with. So I think it's going to be very interesting seeing that hopefully swing into a bit more balance, because Mathieu's right. Europe has got to reindustrialize, basically. It's got to go back to what it used to do very well. And that means infrastructure, energy, smaller companies, larger companies, and of course defense. But it's not just defense. It's about the infrastructure to be able to do the defense.
And if I were to say the one worry I have on the, as I said, it's amazing the U.S. has led so much on innovation, is hubris. Because I talk to some folks and they'll say, look, China's just copied us. That's all the U.S. Well, China's leading in a lot, like robotics are pretty impressive. You look at the EV batteries. I mean, there's a lot going on in China, and I think for the U.S. you have to pay attention and acknowledge.
It's hard though.
Possibly even military. I mean, this little skirmish India-Pakistan. How good was that jet? So there's even that. That's hypersonic. So we've all got to keep going to stay ahead. And you're right, hubris is a risk for all of us, not just for the U.S.
Yeah. What I was about to say is that, again, of course, you're right, that there's extraordinary stuff going on in China. It's hard to invest in.
Absolutely.
So Mathieu makes the point that, there are some easy or somewhat obvious America First trades to look at, like European defense. What are some of the other, maybe not so obvious America First trades to explore? And when I say trades, I don't mean something that you're going to buy today and sell 10 seconds from now. I mean something that you're going an investment, something that, particularly in your case, you're not looking for short-term investors?
I'm happy to start here because there is too much debt in the system, public, private, and that we're coming out of a decade of very cheap, if not free money. There's been even more of these products, put into the system. Right now, the best and single most exciting investment opportunity is to do secondaries, private credit. So you actually buy out of some investors some matured vintages into some direct lending, corporate debt. I mean, you saw, Eric, we're now at 6 to 7% trailing default rate in mid-market corporates. And by the way, this is before tariff. We're talking, Q1. And to Jenny's point, when Q2 comes out. And so now you can be a price setter and no longer be a price taker. And I think this is the position you want to be in this market.
Mark?
Yeah, I agree. Generally, illiquidity is your friend when you have cash. So I think anything where people get a bit sweaty, spreads move out, is always a nice place to go. And in some ways, there's always distress situations from time to time. We haven't had a big structural distress trade for a long time because the flood of liquidity has really been keeping things up. So I do think if we get, not even recession, much slower growth, we may see that distress ripple around the world and provide quite a lot of opportunities. Is there a lot now? Bits and pieces. The other thing that interests me is in what I do is the larger economies that need really long-dated assets as they try and build their capital markets and build their own pension systems, where you can fund things in local currencies, you can build things where you're not totally dependent. There's not a big FX risk involved. So long-dated assets in the infrastructure space.
Which markets in particular?
The bigger ones. The Indias, the Brazils, the Mexicos, the Indonesias, here. If you combine the GCC, very, very interesting place to invest in my view. And has some capital that can come alongside you, which is also attractive.
If I could just pick up on liquidity, because you saw what happened 3 weeks ago, a month ago, how quickly the liquidity can disappear. On the treasury market,
exactly.
On the bond market, on the loan market. Remember that we had a month ago the highest, the record in terms of number of days without an issuance of a leverage loan. That was, even higher than during COVID when the world came to an end. Here, the world was not coming to an end.
And
it was just discussion.
And the 10-year was backing up.
Exactly. So this whole liquidity and the outflows on high yield were all-time high. So the liquidity can disappear very quickly, and that goes back to the complacency, Jenny, where, we should be careful that, that can disappear very quickly.
The very convenient segue to what I promised the audience I would return to, which is U.S. debt. Last week, I think, as everyone here knows, Moody's became the last credit rating service to strip the United States of its AAA rating. It's a bit of an annoying question to ask, I'll admit, but I do want to know how each of you responds to it. Do you still think of treasuries as a risk-free asset?
Want me to start?
Sure.
One-word answer. Why doesn't Jenny start?
No, yes. Yeah, look, I don't think if you hold treasuries today that the U.S. is going to default, right? The problem is when you're looking at it, people, it's still the most liquid. Where else are you going to put your money, right? What other currency where are you going to put it? And so, yeah, I think it becomes the benchmark still for risk-free.
Mark, your one-word answer
remains the benchmark.
I agree with everything you've said, but I would say no. I never thought it was a risk-free asset. One of the easiest things to do when you get too indebted is try and inflate it away. And then you can start to take some pain, not just in credit, but in currency. And the currency cost, if you're not a US investor, can start to get painful.
The highest debt to GDP, since World War II, we know what the deficit is. It's not about the default, it's about the fair pricing, of the underlying risk. And unfortunately, that drives the repricing or the pricing of all other risky asset class. So as it moved, and it moved, significantly, I'm still not comfortable with the pricing of certain risky assets as a consequence of the level of these so perceived risk-free assets.
So then what is risk-free? What becomes the risk-free benchmark?
I don't think there is any risk-free asset in the financial markets.
So there's nothing. So it's as good as you're going to get.
It's as good as you're going to get.
And that's a fair point.
Yeah.
And remember, even when you had cash at the bank in 2008...
If you get inflation, then it's...
But it's as good as you're going to get because
the
it's
banks
liquid.
went bust.
What's that?
Even when you had cash at the bank in 2008, some banks who were AA rated on the Friday did not open on the Monday.
Yep.
Yeah.
So here's perhaps a more useful follow-up question to that. A friend of mine who runs a multi-billion-dollar hedge fund drew what I thought was a great analogy the other day. He said if you treated sovereign credits like wine and conducted a blind tasting on fundamentals only, right? Names hidden, you can't see the labels, don't know who the vintner is.
The U.S. would be an emerging market?
The U.S. would rank at least 2 notches lower, he said, than the equivalent of AA+, as in AA-, like France or Slovenia. And there's obviously some truth to that. What really matters isn't whether the U.S. is or isn't considered a risk-free asset. The question that really matters is how much longer can this persist? How long until America faces a reckoning in the bond market?
Who are we asking?
All of you.
She's doing. I can kick off if you like.
Yes, please.
I think it has one fantastic tyrannical thing, which is a massive liquid market. And in the end, it can probably last as long as liquidity is where it needs to be everywhere in the curve. And the thing that gets people most concerned, which is why recently was quite interesting, was that curve breaking down and there being real liquidity problems. Because the US has always basically said, we will issue and let the curve reprice. And when they start not necessarily doing that, or they start holding back issuance because they're worried about pricing, then it begins to start as a bit of a reckoning. But I agree completely with Jenny. It's a huge liquid market, and it's something, well, it does, I think the fear of that is driving people to make some very interesting investment decisions about things that you have to ask, what is their fundamental worth? You know, can I eat a piece of crypto? You know, can I...
I was waiting for when you're going to get to Bitcoin.
Yeah.
I mean,
sorry.
No, it's supply-demand. You know, it's like, you know, fine wine. You know, fine wine, they sold Bordeaux in primeur, okay? So over the past 5 years, you would buy the top Bordeaux for 600, 700 euro a bottle, you know, in primeur. The primeur came out last week. They're offered at 300 euro a bottle. It's called supply-demand.
Jenny, last word to you.
Look, it's not a problem until it's a problem. And oftentimes when, you know, a crash happens or a market correction happens, it's something, you know, I was reminding somebody recently that, you know, in 1987, it was the trade deficit. Like, that was the trigger. Nobody had been really talking about the trade deficit, and suddenly. And so the problem is we are in a business of confidence.
Yeah.
And nobody really can figure out, like, what triggers suddenly a loss of confidence. And the benefit the U.S. has, which is allow it to continue to spending the way it's spending, is that there just hasn't been alternatives.
What a terrific conversation. I thank the three of you. Ladies and gentlemen, please join me in thanking Jenny Johnson, Mark Holmes, and Mathieu Chabron.
Please welcome to the stage His Excellency Abdullah bin Hamid bin Abdullah Al Attiyah, Minister of Municipality for the State of Qatar and Chairman of the Qatari DR Real Estate Investment Company, Jeff T. Blau, CEO of Related Companies, and Chee Koon Lee, Group CEO of Capital Land Investment Limited, for a conversation with Bloomberg's Jennifer Zabazaja.
Thank you so much, everyone. Thank you three for being here. We were just having a fascinating conversation backstage, initially talking about supply and demand and maybe looking at real estate through that lens. But before we get into that, I wanted to start where we were just leaving off, and that's asking the three of you who have expansive, diversified properties and portfolios, how you would characterize this point in time for the real estate industry. Jeff, maybe do you want to start?
First, thank you for having us here today. It's always exciting to be in Doha. You know, I think, as I said when we were backstage, when you think about real estate, people ask, well, how's the market? And I think it's very hard to answer that question. Real estate, our product is a byproduct of what's happening in the economy, what's happening in the world. So when you have disruption, when you have uncertainty, that creates difficulties in the real estate market. So, for example, if we're building office buildings and you have lots of uncertainty in the market, does the tenant, does the CEO want to sign a very large lease in times of uncertainty? So a stable market, more certainty is always good for real estate. And the other nemesis of real estate is high interest rates. So it's always difficult to build a capital-intensive asset when interest rates are high. So the real estate developers pray for low interest rates. So those are the two things.
Is that your message to the
That's our message. Pray for low interest rates.
Chee, Koon, can you jump in here and talk about it from your region's perspective?
We, as a company, we started as a developer. But in the last few years, we have restructured to become more an asset manager. So that gives us a lot more flexibility. When you're a developer, you use a lot of your balance sheet to do investments to buy land. I think in an environment where business cycles are shorter, political environment, it's a lot more unpredictable. It does make it more challenging to be able to take on big development type projects, unless you're very disciplined in making sure that your entry price is right, you structure it right, and minimize the risks, and making sure that you can get all the leasing done, as much of the leasing done as possible to reduce your downside risk. In my view, this is a time where you don't see things quite clearly, but it does present interesting opportunities for certain high conviction strategies. So for us in particular, I mean, because it's uncertain, we look for strategies that are a lot higher returns, so special situations or private credit where the income stream is a lot more predictable, or in certain asset classes like in the data centers, because we believe in the digitalization sector. And of course, finally, it's on the living, because no matter how the world changes, how disruption takes place, you need a place to stay. When you travel, you need a place to stay, to call it your home. So those are the few things that we continue to focus on, even in a world that I would say is relatively more unstable and more unpredictable.
And Your Excellency, you say also the cultural aspect is important, because you need to ensure that the clientele is there.
Definitely. First, thank you for having us and hosting us in this panel. I truly believe, like you said, that culture and understanding the culture they invest in is very important. There are some countries in the world that value an apartment over a villa, and there are other places in the world which actually enjoys compounds rather than separate villas. So understanding the location, the area.
I bet that was business.
Yeah. Seems like it. Understanding the location, the area, and where you're going to invest is very important. So you talked about supply and demand. And a lot of people look at it that, okay, we have too many offices or we have too many residentials. And the fact of the matter, it doesn't work that way. Quality does matter. Location does matter. So good quality offices now are actually in high demand. When you talked about villas in Qatar, they are in major demand in respect to apartments. So you need to really look at real estate as if you're going to purchase art. You really need to understand what you're purchasing and when you're going to purchase it. And I think we live in a very good opportunistic kind of timeline. We have a saying that, real estate does go with the economy, but it will always have something that will pay you back. It's a way of hedging your currency. It's even when the interest rate is all-time high, people don't buy, but people do rent because they have to live somewhere. And that means the rental market picks up. We have seen trends where a lot of offices are not being built But that means just 2 years from now, with the AI movement, if you may, the global movement of AI or energy transition, that means we will need more offices. Post-COVID, people are being told and asked to come back to the office. That means good quality offices, not old offices, but good quality new offices are actually in demand globally. So in the sense of it, you need to understand the culture, the place, and how you're going to work. However, real estate is always a very good place to invest in. We have a saying in Arabic, I'll say it in English, that real estate can get ill, but it will never die.
Never die, so it will sustain. Can you talk about, you mentioned paying back in the opportunity. We did just see the U.S. president here in the region last week. Your company signed a deal with them. Talk about the value in that and what you're seeing long-term for that.
So Qatar DR signed an agreement with Dar Al-Arkan, which is a Saudi-based company, developer. It's actually a sister, or let's say a friendly company that Qatar DR have been working on for a long period of time. They're using the Trump brand for their golf courses. So there is a misconception there. This actual negotiation happened October of last year, so way before any political moves happen. And to be honest, one of the best golf brands is a Trump golf brand. And I think everyone would agree. So we were very happy about this partnership. We have launched, and the Prime Minister yesterday had talked about it, one of our biggest touristic destination project, which is Smeisma. The heart of Smeisma will be the Land of Legend, a huge theme park, and it will have the golf course, which will be a Trump golf course, and all the resources that will be on a 7 kilometers shoreline. Qatar, post the World Cup, have gained a big movement in infrastructure, as you see. We're actually, by the IMD, we are considered #1 globally in basic infrastructure. So we have built our infrastructure, and we can build on that success by building, tourism. And we have a very clear focus for Qatar. And I think, the Tourism Authority will be talking after this panel, but we have a very big focus on family tourism. So Smeisma will be a great project for that. As far as the visit goes, I mean, it's a historic visit. It's the first time an official state visit of the United States with the president came to Qatar. We were very proud of this visit, and I think it just highlights the great relationships that we have with the United States, and we will continue to have.
And you each have talked about some of the unpredictability that comes within the industry. But Jeff, I wonder if you can weigh in on whether or not there is an asset class within the real estate sector that is able to weather all sorts of volatility and maybe you've noticed outperform.
Right. So at Related Companies, we are one of the largest development firms in the United States and operate in London as well. And the answer is it changes over time, but some of the high conviction themes are also around multifamily today, homes, living, new office, and in particular, we've really spent a tremendous time responding to the digital infrastructure demand and building data centers throughout the United States. And so data centers have become a very unique opportunity because you're building the infrastructure to enable AI to happen with some of the best credits in the world as your tenants, signing long-term 15, 20-year leases. And so that's created a whole new opportunity, and the capital demands for the data centers are nothing like the real estate industry has ever seen.
What sort of numbers, if you can?
So, for example, we're building now a 1 gigawatt data center. A 1 gigawatt data center could cost $11 to $12 billion. So you start doing 3, 4, 5 of them, it starts to add up to a lot of money. And if you think about even a big office building in New York City is $2 billion or $3 billion. So these are numbers that the real estate industry hasn't really dealt with in the past. But we think right now, data centers are one of the highest conviction opportunities because the demand is great and the supply of power is short. And while that supply-demand mismatch happens, you're going to have excess returns there. So we like that. We continue to develop multifamily. We are the developer of Hudson Yards in New York City, and so we're actually starting a brand new office building this month. We just signed a 800,000 square foot lease with Deloitte, the accounting firm. So it just proves that the demand for a new office is still very strong.
But we're still not seeing, at least New York, if we talk about New York, levels at where they were pre-pandemic. Does that worry you at all?
In terms of population, actually, the population has rebounded. People left during COVID and now come back. In terms of office, New York is almost fully back to office, at least 4 days a week. You know, I think the world's decided that Friday is a national holiday. So if you get 4 days, that's back to the office. And so, but you're really seeing a bifurcation in the office market between the older B-class buildings and A, but in particular, brand new. The supply of brand new is low. This building we're starting at Hudson Yards will be the first new office start in 5 years in New York City. Wow. Think about here, you drive around, there's cranes on every corner. You know, New York City doesn't really have too many. But we're now that we're seeing that demand again, I think you'll start to see a couple of new starts.
Chee, Koon, do you double down as well, as Jeff was alluding to, on data centers and AI, really?
Yeah, I think I don't believe that the trend on digitization or digitalization will change. And with AI, with DeepSeek, I think the demand for data is just going to continue to grow. The big challenge, at least in Asia, outside of the US, the big challenge is around whether there's going to have enough energy to be able to support the growth. It's not difficult to buy land to build data centers. The question is water, infrastructure, and power. And if you can get that going, and then the next big question is the capital. I mean, Jeff mentioned just now to build a 1 gigawatt of data center, it's going to cost 10 billion. So there's going to be massive amount of capital that's needed. I think that trend will continue to grow. There's a big question in many investors' mind today is because the AI sector, the technological sector moves so quickly. There are questions around, technological obsolescence, and what does it mean in terms of data centers that you have built, constructed, and maybe used by whether it is co-location or hyperscaler. 3-5 years down the road, the technology, imagine that the technology has changed quite significantly. Then what do you do with data centers? With some of these data centers that may be outdated. So those are issues that, while the opportunity looks interesting, then how do you capture? How do you position yourself? How do you make sure that you build data centers that's fit for purpose for as long a period as possible?
How do you approach it then with caution? Is that sort of what you're alluding to? Yeah,
and location becomes important. I mean, there are, if you are building AI-enabled data centers, some of the users are quite prepared to choose remote locations. So you need to decide, whether you are prepared to invest in data centers that are remotely located. The issue is if the data center becomes obsolete, then what's going to happen to the alternative use of the asset? Whereas if you choose a data center that's closer to city center, even in the event that the technological obsolescence were to occur, then I think you have a chance to repurpose the data center into alternative uses. So these are issues that that we have to think through as we evaluate every single data center investment opportunities. Your Excellency, do you want to jump in?
Yeah, I just want to add because I agree on everything said, but the capital is there. I mean, if we look at numbers, and I like sometimes to base my decisions on actual numbers that took place. In the first quarter of 2025, on cross-border investment between countries, there was an increase of 57%. So that shows that the capital is there. But you need to be selective in where the capital goes. Also, on transactions. We monitor transactions globally. And to be honest, in the first quarter, if you look at the Americas, they achieved only in the first quarter 93 billion USD, which is an increase of 37% from the first quarter of last year. On Europe, Middle East and Africa, they actually sold 55 billion USD, which is a 41% increase of last year, 41% increase. And in Asia, they actually achieved 36 billion, which is, I think, 20% increase from the last year quarter. So, as I said, the appetite for real estate will always be there. The boom of AI is amazing, but yes, there is an opportunity, but there's a window, and the window needs to be captured. I always believe that the biggest place that can invest in AI is the Middle East, because we are already prepared. We have a very modern infrastructure. We have the cheapest energy in the world, and we have all the infrastructure ready for databases. But yes, being smart, I totally agreed. You need to be flexible, and you can diversify your real estate from offices to apartments, or from databases to energy transition, or to health centers. And it seems that every time we have a global talk, real estate investors talk about it. Like back in COVID, people were talking about health services and how it's very good to invest in health services. That was just 2 years ago. And now we're talking databases because of AI. Honestly, I think real estate globally is picking up. There are very good opportunities, but it is really picking up from what it was last year. Interest rates is coming down, and I believe they will continue to come down. We're very excited. We believe that the market will grow this year globally, but obviously some uncertainty, geopolitical tensions, trade policies will put pressure on it. However, if you don't invest now, then when will you?
Right. How do you think about this market here in Qatar? You're talking about energy being cheap in the Gulf compared to some of the other Gulf countries. I mean, if you think Doha versus Dubai, Dubai still has a competitive advantage over Doha. How do you think about it from the real estate lens? I see you shirking at that.
No, I'm smiling because you said competitive. I believe that the whole Gulf is one country. I mean, we build on each other. I have a lot of fans.
Clearly.
So we build in what we have. You don't build a theme park next to a theme park. We actually look at, and we have the Gulf Council, and we honestly build in. So what good stuff happening in Saudi Arabia, the big boom and the big investments, we're benefiting from them. One of our biggest tourists come from Saudi Arabia, and that is part of we're as a whole as one country. So Dubai, for me, is something that we're working very closely with. We're actually building on each other. A lot of the people come to Qatar through tourist services. They come to Qatar, then they go to Dubai, then they go to Saudi Arabia. We represent one place. You know, in the World Cup, people don't recognize Qataris from people from the UAE, from Saudi Arabia. So they know us as Middle Eastern, you know what I mean? So in a way, I think as far as real estate, Qatar, touch wood, but we're the safest country in the world as per capita. We have the best schools. We believe that we want to build on that. We want a place where your lifestyle will be different, where you can see your children going to schools without the need to go through security. And for us, this is what you see. You've been to Qatar, you've been through our cities, our new cities, our smart cities, and you know what, we have to deliver.
Thanks for that. Jeff, before we wrap up, I wanted to ask you all about potentially what the trajectory for the real estate sector looks like in the next few years. I know we're still taking it day by day, considering a lot of the uncertainty, but what would you say is the risk to some of this growth and some of this capital that you all have put into the properties and the projects that you're working on?
Again, I think the environment, political uncertainty is always a distraction, interest rates, but I think with this administration, we're seeing a much more the beginning of stabilization to occur now.
The U.S., you mean?
Yes, in the U.S. And so I think businesses are starting to get their footing a little bit, and so I think we'll enter into a period of calm. And I think that's why you're seeing companies make decisions like the big office lease that we just signed, like the data centers that are getting built. We own Equinox Fitness Clubs, and we have a Equinox Hotel concept that we launched at Hudson Yards. And now we're bringing that to the region, and so we're building 4 Equinox hotels in Saudi Arabia, 1 in Abu Dhabi, 1 in Dubai. And in the green room, I think maybe we made a deal for Doha.
Wow, so, do we want to break that news right now?
No, it will have its own announcement.
So I think there's a lot of opportunity to expand here in the region as well.
Chee Koon?
Yeah, I mean, for capital land, I mean, we have been operating in India, China, a lot of Asia in the last 30 over years. I've been traveling to the GCC quite often. Happy to say that we are starting to look at opportunities, whether it's business parks, industrial logistics, and potentially data centers. And why are we doing this is because, we have very, very deep relationship with many of the companies in China, in India, in Asia, really looking to invest in the Middle East. And it gives us great confidence to be able to look at some of these land opportunities, because we are quite sure that there will be takeout from a tenant's perspective. And as a result, it's really not difficult to be able to raise capital, and will make it quite interesting for us. And even though I always thought that Singapore is quite well planned and quite well designed as a city, but coming to the region and see how well Doha has built up, I think there are I want to encourage the Singapore government to learn from the Qatari government as well.
What sort of things are you looking at?
In terms of city planning, the use of energy, sustainability, making the environment conducive. Every real estate becomes usable for the tenants. I think it's a very well thought through in terms from the beginning to the end. And I just want to congratulate the Qatari government for excellent achievements.
Your Excellency, before I go to you, Jeff, do you think some of these models, though, can be replicated in the U.S., or maybe is the U.S. a different model than what we're seing here in the Gulf?
In terms of the master plan?
Yeah.
I mean, the problem, the U.S. is much more built out than here. So what's great about the region and here in Doha is you have the opportunity to take all the knowledge that happened over decades in the rest of the world and start from scratch. I mean, you would never create the infrastructure underneath New York City if you were starting from scratch. Here, you have the opportunity to take all those learnings and really do something incredible and modern. So each city has its benefits, but that's one of the benefit of kind of creating a city later, right, is all the learnings from the past.
Yeah. Your Excellency, is that some of the learnings that you and the team have looked to? I mean, what sort of markets are you trying to replicate when you look to build up?
Definitely. I mean, our Qatar Vision 2030 was built on learning from others. We started late when it comes to the infrastructure game. And that's why I'm saying we have the best infrastructure in the world, because we learned from everyone else. Who do you think, who were the consultants that built or designed our infrastructure? They're from the US. We have people from Singapore. We have people from the UK. So everything was put into that. And that's why I'm saying, if there is anything, our infrastructure is the most ready infrastructure to utilize AI. Because we have all the data. AI cannot work without having the data to actually access. All our cities were built and the data is available. So we have modern infrastructure. In the 60s and the 50s, we didn't have any infrastructure, and obviously other countries in the world. And that's why I believe that the Gulf as a whole has a unique opportunity to actually lead in smart cities and actual use of AI in our urban planning.
It's fascinating. We're unfortunately out of time, but really appreciate the three of you having this discussion. Jeff, Chee, Koon, and also Your Excellency, thank you so much.
Thank you very much. Thank you very much.
Please welcome to the stage His Excellency Saad bin Ali Al-Kharji, Chairman of Qatar Tourism for the State of Qatar, and Sébastien Bazin, Group Chairman and CEO of Accor Group, for a conversation with Bloomberg's Jumana Bersetchi.
Good afternoon, everybody. Well, it's good to talk about tourism. It's an uplifting sector to talk about. one of the more fun panels to be on today. Your Excellency, I want to start with you. I know tourism has been a big focus in Qatar, part of the diversification efforts. The numbers were really good. They were solid for last year. You're already at 5 million tourists versus your 2030 6 million target. So you're getting very close to your 2030 target.
Exactly.
Talk to us about how important you expect the tourism sector to be as a driver of Qatar's growth in the next few years.
Amazing. First, I'm very happy to be with you on stage with my brother Sébastien here and talking to this beautiful audience. As you know, everybody in the region or globally, they are looking to increase the number of visitors. In Doha or in Qatar, we succeeded to reach 5 million visitors in 2024, which is like 25% increase from 23. But let's take this opportunity when Sébastien here on the stage with me, we are focused more on room nights. First time we reached more than 10 million room nights in 2024, which is a metric allows us to measure the economic impact or economic growth. This is the most important, I think, for us in Qatar. And every hotelier knows about COSTAR, which is give you indications and numbers about where the tourists came from and how long they stay and things. And I'm very happy to find Qatar ranking #1 in the region with a growth around 22% in room nights, which even all Dubai or Saudi taking the lead and headlines. But #2 and 3 is Abu Dhabi and Kuwait of growth of room nights, around between 10 and 8%. We are building on this, and we try to drive these numbers to grow and to have real impact in our economy.
Is it fair to say then it's not just about the number of tourists who come in, but how long they stay in Qatar?
Yes, this is what we're trying to focus on, how long they can stay in Doha, to extend the staycation here in Doha, and to find what the people looking for here in Doha, about adventure, sun, sea and sand, more quality time with the families, and to use the diversified offering here in our city in Doha.
And Michael Bublé, if you're here this week.
Yes, Michael Bublé on Friday. I hope everybody have a chance to that.
So yesterday I had the opportunity to speak to His Excellency, the Prime Minister, and he said one line that caught a lot of attention, that the World Cup was sort of like an IPO moment for Qatar.
Yes.
So it's publicly trading now, Qatar, to continue the analogy. Exactly. What are the next big events we can watch out for in the next few years?
Actually, the big events non-stop activity for us to host here in Doha and to utilize the great infrastructure we have, the stadiums, the venues, the transportation, the connectivity, the great connectivity which Qatar Airways provide also. So in the end of this year, we are hosting two big tournaments, FIFA World Cup Under-17 and Arab Cup for the second time here in Doha, and the F1. So there is three major sports events happening in the last quarter of this year. And around it, there is many, many events in our calendar to activate this great events. And then in upcoming, and at the moment, we are hosting the World Cup for table tennis, and in 2027 Basketball World Cup, and 2030 we'll host the Asian Games for the second time.
Okay, so there's a lot to look forward to. Sébastien, let me turn it to you. I guess it's music to your ears to hear that His Excellency wants to focus on the number of nights, extending the number of nights that tourists remain in the country. How do you look to take advantage of that?
Well, I guess the first thing to say for me is I am in his hand. It's kind of actually interesting to admit we are extraordinarily depending from one another. I am depending on the government of Qatar in terms of vision, ambition, tourism plan, which the Excellency is now leading. And of course, for him to deploy and execute, he is a little bit depending on me and my peers. But let's start first with, he's the decision maker, and I have to listen, and I have to basically be devil advocate, and then I have to make sure I can fulfill the promise. That being said, people probably don't realize it, but I came the first time in this country in 1992, 33 years ago. And I've been coming to this country well above 100 times over the last 30 years. And we have the same baby blues. We, as French, we missed the Olympic of last year. That was the best time ever for France. You in Qatar, and I'm with you, we missed the soccer cup.
As in you have nostalgia.
Because no, it's nostalgia because that was the best time of all of us basically describing the best of Qatar and the best of France. So now we basically have to play on it, build on it, and revive it. And it's not that easy. What I've been saying for a lot of time, which is why I love this country, is you have everything. Qatar has everything. From the very first day, started with Qatar Foundation, with university, with schools, with hospitals. Then Qatar Airways is a gem. But a lot of people don't know of the existence of Qatar Museum and so many other things. So what we need to do together, since it exists, since it's being invested, can we please show it off? And this is where we are today, and it's really building up for the last 24 months, better than we all expected.
Yeah.
We just have to get going.
Certainly sounds like it from the numbers. So let me just ask you about those numbers. Paraphrasing what His Excellency said, the numbers into Qatar, big growth of north of 20%. Other countries in the region also, in the GCC, around 10%-ish. How does that compare to other pockets around the world?
Well, the world is very easy to predict, and please agree with me, tourism travel industry is a blessed industry since 1970. That industry has been growing between 3 and 5% per annum for the last 50 years. New supply has been growing 1.5 to 2% per annum for the last 50 years. So you had a demand exceeding supply by 2 times. The next 20 years, for sure, demand's going to grow no longer 3 to 5, but probably 4 to 6. Supply will remain 1.5 to 2. So we're going into golden ages where demand's going to exceed supply by 3 times. Why? You need 3 cylinders to grow. Do you have a higher demography in the world? Answer is yes. Do you have a higher growth of emerging middle class? Answer is yes. Do you have a higher means of transport, whether it's road, trains, airport? The answer is yes. Now, you've seen GCC, and I was very happy His Excellency Sheikh Abdullah talked before. GCC, for me, is one country. He's so right. And GCC has been increasing since pre-COVID by 32% in terms of destination, which is 95 million. Oddly enough, since I'm very French, it's still not there yet on France alone, which is 100 million. But of course, GCC is going to be way beyond France probably in 2 years from today. So now it's a question, you have the demand, you have the supply, and what's so interesting? Out of the 1.6 billion people who travel, They go now much more to the Middle East, much more to Asia Pacific, and less to Europe. But what we need to do is, on any social media, any app, any corridor channel industry, we need to basically talk about it, which is why we have this forum today.
Yeah.
And we need people to stay longer, because it costs a fortune to get somebody to Doha. Make sure they spend that extra 2 nights.
So would you say for Accor specifically, this is the fastest growing region in the world for your business?
Yeah, what people, when they travel, half of social media content is on travel and tourism and food and beverage, half of it. Half of it is about souvenir. What is it that you like? You always forget what people say, you always forget what people act, but you don't forget what they make you feel. No, but I'm very serious. Everything about feeling, sentiment, memories, souvenir, and it's very tough to execute. So what we need to do here, and which is why I'm so attached to Qatar Museum, Qatar Exhibit, fashion industry, there's a lot of things you can do through the luxury segment, which is easier than the standardized mid-scale economy segment.
Your Excellency, talk me through what Qatar is doing on medical tourism. This is an interesting conversation you and I were having in the back, and I'd love to hear more about it and what your plans are.
Exactly. You know, Qatar is one of the highest countries in the world have spending on healthcare. And I think His Excellency the Prime Minister mentioned this yesterday. We are spending around 12% from our annual budget on the healthcare. And we are in Qatar Tourism, look at it as like it's an opportunity. And we worked very closely with the Ministry of Health to develop the new health tourism strategy. And we just finished and presented to the PM and got approved. This can help us to capitalize on this investment, to call people to come and enjoy the quality of healthcare here in Doha, and to target on this audience as main target for us. Please come, enjoy our quality of healthcare and our quality and safety in the city. This can drive also more people to Doha, and to justify this big amount of investment putting in this sector, and also save our tourism sector. But always what I'm looking for, to use this technology to talk about these projects, about these initiatives. And this is what we are focusing now with AI, with the big tech companies in Doha, and put tourism more closely with the people, to let people, everyone to know what they can have and what they can enjoy here in Doha. If we are not speaking enough as Qatar Tourism, there is many tools we can spread the information and the services, and it's really very interesting working on this.
Is the purpose of that to attract a different demographic than who is currently coming?
Yes, as I mentioned in the beginning, I'm not looking to drive the numbers high, rather than to stay more on the quality of visitors, to enjoy our excellent service here in Doha. In Qatar Tourism, we have something called Qatar Excellence Academy. It's covering all aspects in this sector, from museums, tour guides, DMCs, taxi drivers, teaching people, even tour operators out of Doha, about what we have here in Doha. And using also our partners as Accor or any other hotel company to talk about Doha and promote Doha more and more.
Sébastien, you were saying you've been in Qatar since 1992, is that what you said just now?
Yeah.
Okay, do you feel like because you've been here longer, you have a competitive advantage over the other hotel operators who are looking at the region as well? Because there has to be more competition now.
I wish the answer is yes. I don't believe so.
Why not?
Well, because the Qataris are very demanding. They love me for who I am, but they want more.
That's a good thing. It's a high standard, though.
So it's no. I think I have a better read on the Qatari officials and have a very deep relationship. But that's good. But that's not good enough. So I know, and the more I know them, the more they ask from me. So I guess. But seriously, it's the difficulty of this country, and it's one, and it's being addressed. We don't have enough luxury beach resort experiences. They built it in Dubai, They are building it today on the Red Sea in Saudi. They built it in Abu Dhabi. And we are, I say we as Qatar, we are late in this country. And most of the luxury hotels today still don't have great beach access, which is why altogether for the last 4 years, we basically launched this Land of Legends and the golf resort, all that $5 billion investment being made by Qataris and non-Qataris, by the way. The theme park, the water park, the retail done by Land of Legend, which I am associated with, we've been saying to the Qatari official for the first time, we want non-Qatari to put the money at work. We're going to put skin in the game. We're going to build it. But that is what's missing in this country, is people will come here if they have entertainment, leisure, water park. I know Qatar Fan exists and Qatar Fan is being built. I'm just saying we need more of them and we need to go quick at it because other countries will offer the same thing and hopefully not sooner, but we need to catch up. Sorry, I should not be saying we. I'm an outsider, but I guess.
No. I thank you for this frank answer. But all what he said, it's already been addressed on. We happy that the SMESMA project been announced, and it's a big investment, 20 billion real investment. I think will drive the tourism sector forward, and as a new product and new offering to utilize the beautiful beaches of Qatar.
What's the name of the project?
It's a SMESMA project. It's 20 minutes drive from this hotel, and it will have the great Land of Legends theme park with different kind of offering resorts will be around it, with a great golf course, which will give a great experience for the visitors. We'll announce tomorrow, when we will sign here the first PPP project between Qatar Tourism and Public Work Authority and Ministry of Commerce and Industry, and further details will be announced in tomorrow's press conference. It's a project about development, new development for the new beaches here in town, in Doha. We are developing also the beach for this hotel, which is missing. And by the way, we stopped licensing new hotels in Doha. We have around 40,000 key rooms and 7,000 key rooms in pipeline. The only hotels I will gonna give a license to it is beach or waterfront resorts and hotels. This is what's missing in Qatar. He's right, but we are working on this.
Sébastien was onto something then. How do you think about the interplay between luxury and sustainability?
Actually, luxury and sustainability is very well integrated here in Qatar, in every and each project being developed for the recently in Doha. For worth to mention, Ras Brook resort, we have great Habitats hotel there. It's been built in a Marine Biosphere reserve. It's UNESCO designated area. It was very environmental strict areas, but we developed great luxury resort there. QNCC, the Qatar National Convention Center, it's one of the latest, it's been there for 10 years, and it's the first convention center in the region have LEED certificate, which is also focused on sustainability and luxury. Musharraf downtown, it's very well designed as a luxurious place and also environmentally friendly. So luxury and sustainability is really very well integrated by design in Qatar.
Sébastien, earlier you were talking about people remember how a place made them feel as opposed to what they did. How do you maximize customer experience in your hotels?
Well, it's all about service. We talked about AI a little bit. AI will be an enhancer before and after the stay of the client. During the stay, anything which is human interaction, smile, service, expertise, they do something before you ask, is what you remember. And I hope all of you staying here in the Fairmont and Raffles will remember the quality of the people you have met. Just, I want to do a side note because I don't want to forget about it, and I haven't talked about it with you, Your Excellency, is what we need to do together soon is we need to target India. India will be a game changer when it comes to international emitting markets. People, we go to India quite a lot. You have today 40 to 50 million Indians traveling away from India. Americans are 160, Chinese are 160 million. I guarantee you within 3 or 4 years, that number will go from 40 to 50 to 150 million, only within 3 years. Those people from India will go east, they're going to go to Southeast Asia. West, they're going to go to GCC. And those people don't know the world yet. They are the emerging middle classes. They need to be caretakered. We within Doha, we can welcome a lot of Indians, hundreds of thousands will actually reach your target. We need to go at the source. Qatar Airways is the best equipped. Indigo Airline is the best equipped. This is how we should actually battling together, is go to those source and basically invent for them what they're looking for, which is warmth, culture, interactions, entertainment, and memories. It's absolutely doable. Sorry, I don't know why I say that now.
But it's worth to say on this point, we are, India is in tier 1 of our priority markets. And what we just published recently, that every Indian who got UK and Schengen, US, Australia visa can enter Doha with visa on arrival. I think this will enable more to target more Indian visitors to Doha. Also Pakistan. So this is a very important market. We are looking for more slots for Qatar Airways with India. There's great potential. And they think they will have the great experience here in Qatar.
Final quick question for you. I'm going to put you on the spot. So I have only ever been to Qatar for business purposes. Let's say I want to come and do a 1-week visit because you want longer hotel stays, and I want to stay for a week with my family. What should I do?
It will not be enough to explain all this for you in this 30 seconds.
Obviously, I have to take a Qatar Airways flight to get here.
A lot of things. I'm sure you will have the best time for you, especially as a family. It's suitable for all types of travelers, all different ages, with the wide offering of shopping experience or culture experience and beautiful museums here in Doha, traditional souk, the culinary, the food in Doha is really great. And I'm sure there's many of us, food is the first factor to decide where to go. And I'm sure they can have the best meal here in Doha for you.
Jumana, the head concierge here is called Randy. There is 3,800 clés d'or in the world. Accor has, I think, 120 of them. Randy will give you by 5 p.m. tonight absolutely everything for 7 days within Qatar. You're going to have it. You'll be very surprised. Everything has been prepared for the World Cup. When we send 12,000 people here, it's already existing. It's already being planned. Make sure you do spend a week. I'll give you all the excuse in the world, but yeah, 5 p.m. you'll have it in your hotel room.
And by using Visit Qatar application, it will give you a set or already itineraries for 3 days and 4 days and 5 days itineraries. It's already there.
Well, I started off saying this is going to be one of my more enjoyable panels. No offense to the other panels, but this is very fun. Thank you so much, gentlemen. Thank you.
Thank you, Joanna.
Thank you very much.
Thank you.
Please welcome to the stage His Excellency Hassan Al-Thuy, Managing Director of the Supreme Committee for Delivery and Legacy, for a conversation with Bloomberg's Jason Kelly.
Thank you. All right.
Well, it's great to be with you. Thank you for spending some time. We've been talking a lot, and obviously it's literally in your title, this legacy. And let's start with what I think a lot of this audience knows, and certainly I know from looking after the business of sport. The legacy of the World Cup is one of the most interesting stories around, especially at this moment, as back in North America we think about the World Cup, and then obviously in 2034 it coming back to the region. If you had to distill down the single biggest lesson from hosting the World Cup, what would it be?
Well, to start off with, I think one of the biggest legacy elements of the World Cup is the fact that I'm still talking about the World Cup.
Yeah, right.
So I think that's the starting point. Thank you. No, I mean, distilling one single lesson. You're trying to distill 13 years of toil, but I would say knowing what we wanted. When we entered, whether the bidding stage or on the delivery stage, from day one, we knew exactly what we wanted out of this tournament. We knew that we wanted to retain a legacy. We wanted this event to be an accelerant, a catalyst for positive change, both in the country and within the region. We worked towards that goal. We realized the challenges that were ahead of us, and one of the most important legacies that we wanted to leave was the human capabilities in terms of delivering such an event, and we worked diligently towards that. So the simple lesson, I guess, is knowing what you want out of this event and out of this tournament. We knew from day one what we wanted, and we worked very, very hard towards delivering on it.
Yeah. It's interesting. I don't think I'm giving away any state secrets. You are often asked for your advice from, host cities and host countries. What do you tell that, beyond that lesson, what do you tell them in terms of, there are North American cities who've never hosted something of this scale? Is there something that they have to do, either logistically or even philosophically, that comes to mind?
I think, well, to start off with, again, the first and foremost element is knowing what they want.
Yeah.
I think, again, I keep telling, any city or any country that's hosting this to be very, very clear about what they want and working towards that. That's the first aspect. The second aspect, operationally, if you were kind of to distill it down a little bit, on an operational level, communication. Communication is vital. Communication amongst the operating team. Communication, I think one of the levels of success that we showcased in the World Cup was the security level that was present in our World Cup and the success that came out of that. And again, a statistic that I always love saying, not a single English fan was arrested during our World Cup. Hasn't happened since, and so far it doesn't seem like it's happening, before or since. And one of the main reasons was the collaboration and coordination with the security officials, along with the operating team inside the stadium, transportation, and so on. There was a very clear communication plan. In the event anything changed or whatever circumstances got imposed on you, the ability to deal with that change, and again, communicate it on a lateral basis internally amongst the rest of the team, but also, very importantly, with the fans themselves.
Yeah.
So fans would not be surprised, and to the extent that they were surprised, there was an open line of communication between us and the fans so that they're able to understand what is happening, what do they need to do, who do they need to go to address that. And I think that led to definitely a very seamless fan experience, and from our side, I'm very proud to say, a very seamless operation.
And so, and you alluded to this, you're still talking about it, but you're talking about it in part because of, and I'm using your own word, the catalytic effect it had on this country and on the region. I assume you hoped that would be the case.
Yes.
How does that manifest? What does that look like, and how does it influence you going forward?
You mean in terms of how did it impact the region?
Yes.
I mean, I think the event, and I say that again with a lot of humility, but I think the state and the region got together in hosting what I will say, until I see otherwise, probably the best sporting event as of today in history. Whether you're talking about, like I said, operationally, fan experience, the impact it's had in terms of bringing the world together.
Right.
If you look at the fact that you had, let's call them the global north with the global south. Initially, our view was this is an Arab World Cup, and the Arab world will be welcoming the rest of the world. But then it evolved and manifested itself in terms of the global south being very present over here, and the global north embracing that diverse culture, and it became a global carnival. Regardless of the fantastic tournament that happened and the football that happened, it was truly a celebration from beginning to end. And I think what that showcased is the fact that this region is not an afterthought or a nice to go and, you know, dare I say it, be a cash grab. The fact is this region today is a significant player and can actually host major events, and not only just host them successfully, but rather add value to that event, elevate the quality of that event, elevate what's happening. And I think, you know, I say it, you know, maybe it's not a direct causation, but today you see, for example, you know, Saudi and what's happening in Saudi. You know, a lot of the major events that are happening over there. You know, for example, in boxing, boxing's been revolutionized to a large extent as a result of what's happening in Saudi, and the ability for Saudi to host some of these major events and so on, sporting events. Today, for example, Morocco will be hosting the next edition of the World Cup, and Saudi will be, you know, it will come back. The World Cup will come back to the region for Saudi. And I think everybody today is not looking at these nations and saying, why are we going there? Or how did that decision come about? Or what is the tournament going to be there, with a lot of cynicism, which we faced for 13 years, but rather, what is next?
Right.
People are expecting that, you know, what's going to come, any event that's being held in this region, they're expecting 1,001 kind of night experience.
Yeah.
And there's no doubt that the World Cup paved the way for that.
And so on the what is next front, the World Cup is sort of one of one when it comes to events, as you've said. So what are the other sports that are most interesting to you in this state and in this region that you feel you can sort of use that same sort of formula for?
Well, I mean, look, first and foremost, football will always be the number one, tournament or number one sport over here. Right. I think it goes without saying. So we've got, for example, this year we're going to be hosting the Under-17 World Cup. We're also going to be hosting the Arab Cup, which we hosted in the lead up to the World Cup. And I think the Arab Cup, you know, in the lead up to it, there might have been an unawareness of it. Then it just picked up, and it just became such a great event and literally galvanized the entire Arab world, not only within, you know, our part of the world, but rather the Arab diaspora as well. So that tournament, I think, in itself you know, holds on to its own. But then there's other annual events that keep on coming. For example, you've got the Formula One. There's a lot of, you know, for example, tennis continuously come. We've got the Intercontinental Cup. And there's a few other events as well that will be, I'm looking at, you know, the heads of the tourism over here in front of me saying, am I going to be announcing something out of the way? But no, I mean, look, sports in the end, a lot of the other events that you might be hosting, which would be fantastic, a lot of cultural events, a lot of conferences, but ultimately sports is the one that galvanizes a lot of these. And I think, you know, we've got, for example, paddle today, part of the paddle tour, which I think is a growing sport as well globally. Both in terms of participation, but also viewership, and that's one of the events that we're hosting. Tennis, the MotoGP. I mean, it's a kaleidoscope of major events. But dare I say it, all of it's centered around major footballing events.
Right.
This is what's happening in our part of the world, or let's say in this state. Obviously, in the region, you can see what's happening right now. In boxing right now, you know, Saudi Arabia is taking boxing by storm. I think esports is going to come very, very soon towards our part of the world. Saudi's hosting the Esports World Cup. There's a lot of discussions and exploration about other forms of esports as well. And, you know, there's a certain major sporting event. I think the Olympics will always be on the horizon. Yeah. And people will always look at the other major sporting event that brings the world together in an unprecedented way. So the Olympics is definitely something I think that is on the horizon.
Talk to us about sports as sort of an economic development engine, because we were talking about this earlier with some of the team owners, Mark Adanasio, Ted Leonsis, Amanda Stavely, this notion of a sports ecosystem that, you know, lifts things beyond the fans, obviously has a profound effect, as we see around Qatar as it relates to infrastructure. But even beyond that, the sort of economic sort of engine that it creates, how do you take that beyond sport into broader culture?
Well, again, it's how you approach it from the very beginning, right? If you look at it purely as a sporting event, and I think everybody's evolved from that.
Sure.
Most either nations or even most team owners have already evolved from that and looked at it as a catalyst. So whether you look at a stadium, how do I build real estate around it? How do I make the stadium usable 7 days a week, not just during the tournament and come back? And so, you know, whether it's hotels, whether it's training centers, whether it's museums, whatever it may be that you know, attracts footfall on it. On a nationwide basis, again, you want to look at what's the industry that this event, sporting event, can create. You know, when we looked at it, obviously we were at a time looking at upgrading our transportation infrastructure. And so we looked at this event and how can this event be applied in terms of, you know, upgrading transportation infrastructure. Tourism for us, which is always the more immediate beneficiary of these major sporting events.
Sure.
So you look at tourism today, and how can this sporting event, function and work hand in hand with the tourism authorities to ensure that it's sustainable and becomes a platform that launches the tourism plan. I think, if I'm not mistaken, I think that, Saad maybe mentioned it earlier, today we've been addressing I think we've overreached our numbers, right, if I'm not mistaken. 2025, we're talking about 5 million visitors. I think that was, in the original plan, might have been in 2027 or 2028. I'm not exactly sure about the timing, but we've definitely accelerated our tourism KPIs quite extensively. It's how do you utilize the entire resource of the nation and the state in terms of capturing all these economic benefits and economic goals. The infrastructure today has led, of course, to Qatar being a global hub for major events, but also a global hub in terms of economic activity as well.
Right. And so when you think about the continued ambition, the ambition leading up to the World Cup and the ambition coming after, what are the either historical analogs that you look at or sort of current, the peer group that you think about in terms of, okay, I want to be like that, whether it's a team or a league or a person, like who are some of your North Stars?
Well, I'd like to say that, I'd like to start off by saying I think we are a North Star today.
Okay.
So let's just start off with that.
Quick flex,
North Star. I'm sorry, the little pride kicks in, so I apologize for that. I mean it with a lot of humility, really. But I'd like to think that we have, evolved into being a North Star. But I think just having a conversation generally about the sporting industry and generally about the value that gets extrapolated out of the sporting industry. We were talking about this earlier. I think one of the duo that I look and the teams that I look as having captured the essence of this is, for example, Wrexham, right, and Ryan Reynolds and Rob McElhenney, right. What they've been able to do with Wrexham was create a narrative, create a personal connection to that club. And as a result of that, add value and create value, regardless of what was happening on the pitch, which was phenomenal, of course. Historically now reaching potentially the Premier League in a record time. It hasn't happened before. But apart from that, they were able to create a story out of this that people connected with, that the local, it revitalized Wrexham in a way that nobody imagined it. I was talking to Ryan a while ago, and what he was saying was, when him and Rob were walking down the street, people would come up and say, one lady actually said to him, we never thought anything good would happen to us. Thank you very much for what you've done. So the way it galvanized the society, so it had an impact on society. The team itself started, again, anybody who might have thought about investing before would have thought that was a ridiculous investment, high level of risk. Today people say, wow, look at the value that came out of it.
Right.
But they created stories out of it. It wasn't just a football team. There was stories out of it. That was a phenomenal, that was definitely something that you could, I look at and emulate. And, I'd also be remiss at, not mentioning just one achievement as well for people that I have a lot of respect for. Amanda and Murdat, who are sitting in the, I can see them in the crowd. What was done with Newcastle as well is a phenomenal achievement as well.
Yeah.
In terms of the storyline, but more importantly, the work that was put in, to be able to achieve, and I think historically and emotionally have, again, everybody who supports Newcastle kind of just follow up in that. So I think the secret generally is the fact that I think whether it's sport, we live in an age today where it's an attention economy. I'm not the first person that said it, I'm not the last person that's going to say it, but we live in an attention economy. Whether it's football, whether it's basketball, whether it's golf, whether it's a conference, whether it's a TikTok star, everybody's fighting for attention, one way or the other. And I think when sport out of every other, let's say, asset class or every other event, has the strongest ability to create that spark of emotional connection with people. But the idea is then how do you create that value and maintain that value? And, the examples that I've just said have been able to create that long-lasting relationship, that long-lasting investment into the team that continues giving and adds value and adds, more importantly, loyalty.
Right.
And so, ultimately, when I say to any event, anything that we're looking at, whether sporting or otherwise, ultimately there has to be that emotional connection that builds that brand loyalty or that team loyalty.
Well, and Ryan and Rob, to go back to what you were saying, talk a ton about storytelling, and you've mentioned that as well. When it comes to that, I know you have some ambition as well in the film business and the film industry, and sort of continuing to build on what is a long legacy here, but maybe a quieter legacy. How do you accelerate that, or how do you amplify it, I guess, maybe a better word?
Well, I think to start off with just, again, just one little, I think storytelling is part of our tradition. I said this, I think, a couple of years ago when I was on stage. Storytelling is an ancient part of our culture and tradition in the entire Arab world. I think, you know, if you look at film industry, specifically, for example, the Egyptian film industry and otherwise, you know, some of the oldest film industries, as old as Hollywood, if not, you know, some of them might be older. But I think, you know, today, unfortunately, we don't have our stories or our content being, you know, creating the blockbusters that other nations have been able to create. So I think that, you know, for what we want to do is, one, create a collaborative effort amongst ourselves. So, you know, I was just recently in Cannes, had great meetings with a number of different people working within the industry and some of the countries as well, neighboring countries, about looking at areas of collaboration and working together in terms of, you know, becoming a gateway for international production, because that always gives the exposure towards improving our storytelling capabilities in a way that international audience consumes it, but at the same time also harnessing the talent of our people and harnessing the talent of the content creators of our region to be able to create those content, you know, to create the content. But it's important to focus, like from the way we view it as well, when we're talking about the global market, it's not purely focused on, you know, getting, for example, the Grammy or the Oscars and looking towards the West. But more importantly, there's markets also in the East. You know, Indonesia is definitely a quiet market that's looking to wake up when it comes to content creation and content consumption. If you look at the West, you know, the East, there's significant markets that have already established themselves or are establishing themselves. And I think there's room for our content to travel there as well. So I think the idea for us is to, initially we're talking about the region as our part of the world, the MENA region, the Arab world. But I think it can very quickly evolve towards being a global South part where we create content for ourselves, to be consumed by ourselves, and then push for it to become, you know, globally consumed or also move westwards.
And so what gets in your way? We're going to wrap up in just a minute, but like, what gets in your way of that ambition?
I've been very positive. Don't make me do that.
What do you worry about?
What do I worry about? I mean, look, I think I got to take a second to think about this. It always becomes a question of timing.
Yeah.
Right? I think everything that we do today becomes a question of timing. And making sure that you do it in the right way, you build it in the right way to ensure that there's legacy. But sometimes you need to capture the opportunity before you're fully ready. And that's where you need to create the balance. Are you, you know, it's always the question that's in your mind. Am I really, you know, jumping the gun right now and taking, you know, because this opportunity is in front of me and it's the last opportunity, and am I grabbing it without being fully ready? And then all of a sudden, you know, you don't deliver upon your promises? Or am I being too cautious and saying I'm still not ready, and the opportunity then passes away?
Right.
And I think that's where you want to create the balance. To start off with, I think our you know, what we're viewing our approach when it comes to the creative industry is a collaborative approach, not a competitive approach. Obviously, there's always going to be a level of competition. That's the nature of things, but in a very collaborative way as well. But then the idea becomes, you know, in doing that, are we moving in the right direction together at the right time? Or are we missing out on these opportunities, and then we have to rebuild from, you know, so I think the question of timing and making sure that we're not overly cautious or overly ambitious.
Yeah.
Ultimately, though, it's one thing that I think, you know, for me personally, but I know the state of Qatar always holds itself to, which is delivering on our promises. And I want to make sure that we do deliver on our promises. And every vision that we put together or we present is one that we work very diligently towards delivering on it and not failing the people that have put their faith in us.
Well, because is it fair to say that part of what you did learn, to take us all the way back to the beginning, from the World Cup was that ambition is your friend, and that maybe it is worth sort of extending a little bit.
Ambition is your friend.
Yeah.
Aim for the stars. Make sure your feet, though, are still touching the ground. So you're a bit more realistic while you're very, very audaciously ambitious. Being resilient, being resourceful, and being tenacious. I would say these are the factors, if you will, that you need to put in yourself to kind of move forward. I'm looking at the CEO, the new CEO of Badr Al-Mir, CEO of Qatar Airways. Please, if somebody can put the camera on him. And Saad as well. I think they're well.
Nothing if not ambitious.
Well, by the way, no. But if there are two people that really represent this, by the way, I would definitely look towards them as two people that really represent these qualities that I put forward as well.
You're quite good at this. You're right on time. Thank you very much for your thoughts. Thank you for your attention. Great to spend some time with you, and good luck with your ambition. Thank you very much.
Thanks.
Thank you.
Doudin, co-founder and CEO of BitOasis, and Emmanuel Givanakis, CEO of the Financial Services Regulatory Authority at ADGM, for a conversation with Bloomberg's Ana Herrera.
Good afternoon, everyone. Thank you for being here with us. We're going to get right started because we have a very big and broad topic that's very much in vogue again these days, and we don't have much time. So we're going to chat about crypto, what the outlook is from a regulatory perspective, from investors, from a country's perspective, a financial center's perspective. Emmanuel, I want to start with you. So Abu Dhabi was one of the first, and the ADGM was one of the first, regulators in the region to come up with a framework. Can you tell us what sort of the thinking was behind it and what the lessons learned have been so far?
Thanks, Anna. The thinking was really from the genesis of our fintech agenda. So we launched a fintech agenda in the beginning of 2016, and that then evolved our thinking. And we had a lot of engagement, interaction with the fintech industry as a whole, from the tech side to the financial services side. And one area that kept cropping up was digital assets. So we thought, well, let's look at what the risks are as a risk-based regulator, an activity-based regulator. And we decided, let's try and build a framework around those risks that this type of activity will present. So we built that in 2018 when we launched our digital asset framework. I mean, the key risks for us in our framework were money laundering, obviously, number one. And then we had investor protection, so things like suitability, disclosure, etc. And what flows on investor protection is custody, safekeeping of assets. So we applied the full regime on those areas. We also looked at market abuse, so if there's an exchange operation. So we applied our market infrastructure framework, but we tweaked it to make it work for the digital assets. But our digital asset framework was much broader than just crypto. So we tackled crypto, digital securities, and fiat reference type tokens, stable coins, etc. So we took a very big, comprehensive approach, and but we put the bar high as well, because ultimately we wanted to make sure we could mitigate the risks, because it was a very new area and no one else had really tried to tackle it.
And notoriously, it's had big ups and downs and big explosions. So Yusuf, Qatar has taken a very different approach to crypto, but you've been very active on blockchain and tokenization. So can you talk a bit about what you've been doing here in that area?
Yeah, thank you. So we're the financial center. We're pretty much the same as ADGM, except we have a slightly different operating model in that we are an onshore legal environment, and businesses that set up in the Qatar Financial Center can do business onshore freely, which means you're taxed and there are no physical boundaries. So we have to be a bit more cautious and coordinate with the local regulators when it comes to digital assets. But if we go back to digital assets, a lot of people confuse digital assets with crypto, and digital asset could be any type of value in digital format that could be transferred and owned and powered, of course, by blockchain or digital technologies. But, crypto is just one vertical. You have stable coins, you have central bank digital currencies, you have security tokens, you have utility tokens. So, there's a great universe out there in terms of digital assets. When it comes to the Qatar Financial Center, obviously the policy of the central bank in the state of Qatar is that crypto is a no-no. And for us, crypto is a no-no. Even trading crypto is heavily regulated here, even if you do it through the local banks. So, you know, our entire focus and resources and investments has gone towards tokenization. And the reason we've gone that route, not to say that we haven't tackled the other verticals, but most of our focus is on tokenization because, first of all, tokenization solves a real problem we have in the economy, especially when it comes to real assets. Democratizing, you know, real assets such as securities or such as real estate really helps drive the economy go forward. If you look at the universe when it comes to tokenization, I mean, you have $30 trillion of tokenized assets expected by 2030. You have $15 trillion of illiquid assets being tokenized by 2030 as well. And then you have $8 trillion of security tokens expected in 2030. So I think there is a lot of focus on tokenization. We believe it solves a real problem for us. We're going to focus on it. We've issued regulations when it comes to tokenization. We have the digital asset regulation that was launched in 2024. We have the investment token rulebook as well. And we have guidelines for security tokens. We've been able to put a framework to start licensing digital asset companies in the KFC swiftly, efficiently. Some of those entities, when it comes artificial intelligence technologies, are non-regulated, so we've taken a very liberal approach. We've licensed them in less than 24 hours. For the more regulated activities, we have plugged in central bank regulatory framework which applies to the entire state of Qatar. You can still benefit from the legal environment in the Qatar Financial Center, have English common law in terms of registration, but when you conduct activities, digital asset activities, you have full access to the onshore market and you're regulated by the central bank, and that's the approach we've taken.
So Ola, you're as a business in the region, right? How do you approach the fact that rules are still a bit fragmented? How do you go about, you know, working somewhere where just, you know, in the region there's a difference? Not to say, I mean, globally even.
So as BIT Oasis, we've been the first and today one of the largest crypto asset platforms based here in the region. We're headquartered in Dubai, and we've got regulatory licenses between the UAE and Bahrain as well. So those are the two countries or jurisdictions within the GCC where we see regulatory maturity for broker-dealer businesses that are trading crypto assets. Spot largely what we're offering, and I think we're seeing some frameworks being developed for the crypto derivative markets as well. So our licenses that we have purely broker-dealer in terms of activities, and we, as part of that, can offer custody as well. And I would say the market is fragmented from regulatory perspective, correct. But overall, I think the MENA market, and especially the GCC, has been, in terms of demand and growth, has been amongst the fastest growing markets. The two fastest growing markets in terms of adoption is the UAE and Saudi. And Saudi actually between 23 and 24 has grown by over 150% in terms of crypto adoption, despite the slowness in the market, at least in 2023. Now, obviously, the market has really kicked off. UAE obviously is on par with the Saudi market in terms of growth. And majority of our activities today is focused on the UAE market. Obviously, we've just secured the Bahrain license and will allow us to serve high net worth individuals or qualified investors, with crypto services across the GCC market. But from a retail perspective, obviously there are still challenges in terms of regulatory clarity in some jurisdictions across, not just GCC, I would say, but also across the region overall. Definitely for us as, builders, entrepreneurs, operators in this space, having more homogeneous regulatory frameworks, perhaps passporting, agreements are set up would definitely help us continue to grow and scale and tap into the market opportunity in a regulated market. Because the reality that we're seeing when there's lack of regulatory clarity, especially in large markets, for instance, like Saudi, Egypt, other markets across the region as well, the demand is there, and that demand is being met. However, it's being met by unregulated platforms, sort of, underground type of markets that really exposes consumers to risk. And similarly as well, there's a risk of, higher risk of money laundering, terrorist financing, and all of that comes with unregulated activities. So we try to partner up with regulators, share our know-how from a public policy perspective, and then once licenses are there, be amongst the first to get those licenses.
So just one quick follow-up. What do you think is driving this increase in demand in the region?
I think there are several reasons. First of all, I think the demand that you're seeing across the GCC is quite different to the demand that you're seeing, for instance, in other places across North Africa as well, Egypt, etc. In the GCC, largely, I would say investment in a new asset class. So, Bitcoin in the last 3 years, in fact, even in the last 5 years, has been amongst the best performing, assets in terms of an investor portfolio. So over the last 3 years, it has appreciated by over 290%. And overall, obviously, if you've been early in the market, you would have done significant gains. So overall, I think it is really investment in a new asset class that has been high performing. Bitcoin, I would say, more specifically. And then what we're also seeing, and that's an adoption, not just in the GCC, across the region as well, the usage of stable coins for cross-border payments, paying freelancers, online payments, remittances, etc. And I think that's where regulatory clarity is very important, because crypto is not just crypto assets. And I think also, Yusuf, you just mentioned there's the tokenization part that requires a different regulatory framework. There are stable coins and payments that also requires a different stable coin framework. And we're definitely seeing regulators across the GCC catching up to that. So I think there are different use cases, but overall, I think there's sort of the right product market fit when it comes to that type of application, payments, investments, and later on, obviously, tokenization as well.
Emmanuel, just taking a step back to the global fragmentation and regulations, you obviously will be speaking to your peers. Do you think there will be more harmonization? Because part of the play in crypto, we've seen exchanges move from one country to the other, have part of the business somewhere. So is it likely that there will be harmonizations? Is it needed?
I like to think of it as alignment. And I think rather than harmonization, because unlike sustainability and taxonomies, which I won't go into today, there's been a gap in regulations. So rather than there being a whole host of regulatory frameworks that are competing with each other and not quite aligning, we have a void. And some of us have jumped in much earlier than even the standard setters and developed frameworks in that void. So like what I was describing earlier in 2016, 2017. What happened in the last 4 or 5 years is that in particular, IOSCO, which is the securities standard setter, in essence. And the annual meetings were in Doha here last week. And one of the key 3 topics was crypto and virtual assets. And it has been for the last 4 years. And there's been a lot of work done amongst the members of IOSCO to develop a harmonised, principled approach to the regulation of crypto. And last year, that came out in some more formal documentation. But that was a consensus-driven alignment. The good thing for us was that consensus and alignment fitted well with our framework, because it tackled the same risks that we had tackled back in 2018. So for us, it was quite refreshing, and it validated all the work that we had done. So we're pretty confident we're on the right track, but you have to be vigilant at the same time. When it comes to alignment, not fragmentation, I think you're seeing more and more of that globally, and I think everyone's going to use the IOSCO principles and guidance to create that alignment, like we did with banking and other securities regulations over the last 30, 40 years in particular. So I think alignment is well on its way.
Yusuf, what areas do you think have the most promise here? Which sectors for adoption of blockchain and digital assets as you see them? So traditional assets being put on chain.
Yeah, so for us, again, taking into consideration some of the risk elements and some of the misconceptions when it comes to digital assets. Obviously, when you mention digital assets, everybody starts thinking about crypto, including the regulators. I mean, I'm not just saying, not just the financial regulation, I'm talking about even the real estate registry, the Ministry of Justice, all the other regulators onshore. So they tend to get, you know, a bit freaked out when you talk about digital assets. So what we've done slightly differently to contain that element and make sure we do an experiment through a controlled environment is that we have chosen to use security tokens. And what I mean by security tokens is that you can tokenize private shares within our own registry and then set up SPVs or holding companies that get tokenized, and then you can dump any type of assets you want in that holding company or SPV. The first asset class that we would like to address is real estate. There's a lot of you have been around Doha in the past 2 days. There's a lot of real estate oversupply in the market, but it also solves a significant problem where there's not enough access into this asset class. If you look at a lot of the towers in West Bay or in Lusail or in any other area in Qatar, a lot of the towers are owned by 1 or 2 or maximum 3 landlords. And, you know, these are significant ticket sizes. You're talking about a minimum of $500 million upwards. So, you know, tokenizing a tower or 2, I think, would do great good for the economy and, you know, a lot more access and liquidity to the real estate market. But that's one asset class. I'd like to see as well, you know, Islamic financial products securitized through our corporate registration, bond issuances securitized, perhaps energy infrastructure in the near future. But what I'm saying is, you know, through our laboratory, I would say, which is our corporate registration, we can experiment without, you know, spreading the risk all over the rest of the economy. It'll be a contained environment. If anything goes wrong, then that would be contained within the Qatar Financial Center environment and the risk would be managed efficiently. So, you know, a lot of assets, I think, but we're going to start with real estate, and then we're going to start with financial products as well.
Do you see this as a way to attract foreign investment? You mentioned especially real estate, potentially.
Well, foreign direct investment is one of our objectives. I think what we'd want to see is some local investments in these asset classes to start with, but I think it will definitely give access to a bigger pool of foreign investors tapping into our economy, and then hopefully you'd have some cross-border transactions as well. On harmonization, I think that's a great idea. If we can, I think, you know, if there was any harmonization to happen within the digital asset space, I think the best bet is that it would happen between financial centers because we're a lot more efficient and swift in terms of amending regulations. I mean, it takes us less than 3 months to set up a financial services regulation and then get public consultation on it and then enact it. So we're pretty swift, and I think the same applies in DIFC and ADGM. So I think between those 3 financial centers, if we can come to a common arrangement where, you know, digital assets and certain financial services products can passport into each other, I think that could definitely be achieved rather than a larger passporting mechanism for the entire GCC, which could happen, but I think we're still far away from that.
So, Ola, looking at sort of the outlook now, we talked about demand, but is there any specific area that you see having more demand? Is it coming, you're more focused on consumers, but are you seeing more activity from institutions as we're seeing elsewhere in the world?
Definitely. So from our standpoint, obviously now we're looking at growing more into, I would say, the institutional base. And a lot of that, actually, what we find in the region is mostly family offices that are getting exposure into crypto. Funds as well, but I think they're taking, you know, very kind of incremental steps toward that. Largely, I would say in this space, there's 3 trends that we're looking at very closely, and I think will be very exciting over the next 3 to 5 years. I think, not to repeat the point, but tokenization is a very important and I think will be significant market opportunity. Today, in terms of tokenization as assets, the market is close to 22 billion, apart from stablecoins. So I'm kind of removing stablecoins from that category. And a lot of that is across the DeFi space, tokenization of money market funds, and essentially where you get better returns or better yield as you invest in the token versus into the fund directly. So I think there's a lot of that innovation happening in the tokenization space, but obviously the opportunity is much larger. And as you mentioned, by 2030, actually the market is expected to grow in trillions of dollars. And that's where you see tokenization of hard assets, real estate, equities, etc. So definitely a very important vertical within crypto and high growth. I think second is stable coins and unlocking more growth through real-time cross-border payments. And there's been a lot of that activity as well, I would say, in the UAE market with opening up of the regulatory, kind of friendliness or frameworks. So stablecoins, I think, is a very interesting and high growth area, unlocking also, I would say, more trade growth. And overall, from a consumer level, B2B, and from bank to bank as well, in terms of, in some sense, providing a better cross-border payment network versus SWIFT and some of the other existing cross-border payment networks. And then I think third is institutional adoption. So we're definitely seeing the ETF market growing significantly. Interestingly, actually, as a sovereign wealth fund, Mubadala has grown its exposure in BlackRock's, Bitcoin ETF up to 400 million or above 400 million in terms of exposure and holdings. And I think we'll see more and more warming up in terms of institutional adoption across the region, but also internationally. And lastly, I would say it's quite interesting to see the US building their own, Bitcoin reserve by way of actually allocating some of the seized assets into that. It'd be interesting to see how other countries would also respond to that. So institutional adoption overall has been growing, which is quite interesting.
So do you see also, Emmanuel, from your vantage point, more larger financial firms getting interested in operating in this space, coming to you and saying, hey, can we do something in this area?
Yes, is the short answer. In particular, in the last 2 years, we've noticed exponential growth in institutional interest in the framework and in different ways of approaching it, not just in terms of, say, custody, for example. We're looking at it from exchange operations, derivative-based products. So it's a range. But definitely the institutional-grade investors, I think, have changed the tide of the crypto market, but not just the crypto market, the digital asset market more broadly. BlackRock and its CEO came out, last year and espoused the virtues of an ETF, for example, but also other areas of growth in that area. So I think what we're seeing globally is the market maturing and developing. And that's important because having the institutional grade investors in the market with that maturity and understanding of financial services regulation brings the adults in the room to a large degree and accelerates the whole process of evolution of this industry. So we think it's clearly an asset class that's going to stay, and it's one that's growing. It's growing rapidly, and we as a regulatory agency at the FSRA, we want to make sure we can regulate it properly.
I think we've run out of time. Thank you so much.
Thank you.
Well, we have come to the end of today's sessions. I would like to thank our official partners, Qatar Ministry of Commerce and Industry, Qatar Media City, our cultural sponsor, Qatar Museums, our innovation sponsor, Qatar Research Development and Innovation Council, our premier sponsors, Qatar Investment Authority, Qatar National Bank, our knowledge sponsor, McKinsey & Company, Our participating sponsors, IDA, HSBC, Investment Promotion Agency, Qatar, Qatar Financial Center, Qatar Free Zones Authority, Qatar University, our airline sponsor, Qatar Airways, our connectivity sponsor, Ooredoo, and our tourism sponsor, Visit Qatar. Now, we also invite you to the Bloomberg New Voices launch event for the Qatar Economic Forum. That is going to begin at 4:45 p.m., so in about half an hour's time in breakout room 1. You'll learn more about that program that sponsors media training for senior women in finance and other underrepresented experts from around the world. I myself will be interviewing Carmen Haddad. She is the vice chair of Citi Private Bank, and I really hope to see you there. We'll be starting back up tomorrow morning with our breakouts at 8:45 a.m. Thank you very much for joining us today, and we encourage you to spend your evening tonight exploring Doha. I'll see you tomorrow.